Take it away.
Hello, everybody. Welcome to this live coverage on the Federal Reserve interest rate decision. Market are expecting too much this decision because, market is in turmoil. Everybody is asking the consequences of the situation. And here we are. Dale Pinkert from San Diego, Valeria Bednarik from Buenos Aires, and Yohay from Barcelona right now. Yohay, I know that you have kind of a preview on that Federal Reserve decision. What are the scenarios that we will see today?
Everybody, well, today we're not expecting anything, of course. As you mentioned, the Fed raised rates in December, and they said it'll be gradual. For me, many expect in the markets that the Fed will go dovish. Will tell us that a hike in March is off the charts, but the reason for this matters, if it's because of markets and the Fed is really stock sensitive, then maybe it's a good thing because they care about markets, but they see the US economy is doing well. But if it's because of worries about the US economy, then of course it's bad news. And of course there's also a scenario that they see everything is okay and they want to hike in March, quite a low probability, according also to the implied probability of bonds. And in any case, they'll try to do their usual Fed speak and keep it balanced to keep us all confused. But eventually the market will have a verdict. Some analysts will say, will sort of gather around one conclusion. They were dovish, they were hawkish, they were worried, they were not worried. And then one of the previous scenarios will emerge just a bit later on. So that's what I'm looking for.
Okay, thank you. Valeria, so what is the pairs to watch today?
Well, I have been watching Bednarik. Let me share my charts. And pretty much I was watching what's going on in the market is more related with oil once again, rather than whatever the Fed may decide, right? Earlier today when oil was mute around 30 a barrel, the market was giving away the green mark. Not much, but in general, I do believe that the market was pricing in a dovish stance, right? So if we have a middle dovish stance today, I'm not expecting much from mayors, to be honest. But anyway, what we are seeing right now, as I was saying, has more to do with oil and how stocks are reacting to oil than in anticipation of the Fed. What is really interesting at this point, the most interesting thing for me, is that the dollar-Japanese yen is trying to break last week high, which is also the 38.2% retracement of the latest bearish run around 1890. We are struggling around it. So if the Fed is not that dovish as the market is already believing, right, we may see a rally in here up to 1917, which is a nice bullish target for the pair. You know, this is my first choice right now. If the Fed is dovish and even more dovish than what we are expecting, then I would be looking also for the Aussie, because we had great inflation readings for the last quarter of 2015 in Australia, for the last quarter of the past year, and that is like giving some breath to the Reserve Bank of Australia, right? It's not forced to act, so maybe it can take it easy. They have their meeting next week, so maybe we can see more rallies in here. I do believe that the key support right now is 70.40, right? If we hold above that level, there's still room to go higher. If we lost it because dollar brought strength, then I don't like it that much. And for the euro, to be honest, it's really boring. The euro continues to trading within its range. I do believe 770, 780, which is way too far away. It's the level to take, right, to confirm bearish move. And I would like it to take this highs in the 960, 970, 980 region, right, and break above take a look, 100 simple moving average, the descendant trend line. It has a mess about in there, so it really needs to move beyond 970, right, to look a bit more bullish for me. Those are the levels I watch. And the pound is weak. Poor pound. I'm still saying poor pound. It's really weak. It can react to the oil prices recovery, and that's a lot of for the pound. And we have sort of a short-term double roof around that 4360 region. We have tested on Friday, yesterday, and we couldn't get above it today. So that's another key level for me today.
Thank you. Well, I have some echo from you, I think. So then, yeah, I think so. But okay.
Sorry.
The so market is waiting for the Fed. What is market waiting? What is market waiting?
Well, last week at the ECB, I thought there was a chance for the S&Ps to recover to 1920, 1950, and that looks to be still on course. Last Wednesday, after Draghi spoke and they sold the euro off, I said it was a buy on the break. Had a nice rally, but no follow through. And there are charts that look a little bit more convincing to me, almost like there's a theme that implies dollar weakness coming. One of the charts would be, this is where I said buy it last week, had a nice rally, but no follow through. I almost remain a little bit more negative on the euro now. But when I look at things like the pound, we have a nice ascending triangle here, and this implies an upside breakout over 43.60 that could take us back to 46. Part of that is the recovery in crude, which I think has between 35.80 in it and $38 before another downturn. Val pointed out the Aussie. A lot of people calling this head and shoulders bottom, where this was a neckline and we're trying to break out here. Gold has performed well. So the theme is bottoming type formations occurring. The guppy has a bit of a head and shoulders look to it too. If you go out to the 4 hour, kind of a flat top, ascending lows. I'm not saying we can't pull back to 68, but 174, 175 guppy looks feasible to me. And the crude oil, again, they tried to sell it off. In fact, you know what was the most interesting feature to me today was crude was up while the equities were still down. In fact, the NASDAQ is still down, and the Dow is about unchanged, and that's with crude strength. So the stock market cannot blame weak energy prices today for its weakness. And that's a little different story than what we've been talking about 90% correlation. So to me, this looks like an ascending triangle too, and it targets about $38. So my best guess is I would like the Fed to sound the same as last time, a bit hawkish or interpreted as hawkish, and I would use that to sell the dollar. Is that clear? And really, Yohay and Val covered everything.
I do agree with you that there are some signs of bottoms and tops going on across the board, but I see them weak at the time being. It's like with further confirmation that those bottoms and those tops against the greenback are actually going to take place.
Yeah, they're bounces. Okay, there's everything's about time frames.
Yes.
Right. So but I do think it's feasible for the pound to get through your resistance that you showed there and surprise people with a rally back up towards 46, 47 to retrace that recent weakness. And the pound has been trading with crude, so look how the sell-offs are getting shallower in crude. They sold it off here. This sell-off that we had this week was shallower. We're knocking on the door of major resistance. The whole world's talking about $20 crude. I'm not talking about 50, 60. I'm talking about 35 and maybe 38. If you want to show my chart, that's what.
Yeah, I'm showing your chart.
Yeah.
No.
And we finally got a decent break in CAD, and I don't think it's done going down. I wouldn't get short in the hole, but there's still a possibility that even before we get this reflex rally, if crude continues from here, that we even see 138 first in Canada before we get a better bounce. So Just a short squeeze, Val. You know, just enough to make the crude bears' eyeballs pop out of their heads.
Yeah.
You know, and
Thanks,
then, you know, I could see how people are talking about 20, because if we rally from 26 or 27 to 37, 38, and then take out that and subtract $10, it does give you sub 20. So just do the right thing today, and tomorrow takes care of itself.
I like that expression. Yeah.
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 So, Yohay, what are the odds on the Federal Reserve? What is the possibilities?
The implied probabilities
Yeah.
on the bond markets, of course, for January, we're talking about basically no chance, 87% against any move. In March, it used to be more or less 50-50, but in recent weeks, after the market turmoil and some unconvincing US figures, it's about 2/3 against move in March. Let's see what happens after the decision. And currently, a rate hike is priced in only for June, which is the next Fed meeting after March, which does have a press conference. And then we have a bit more than 50% of a chance for a rate hike. And I think that's what also economists see at the moment. Something like the next rate hike coming only in the summer, and perhaps another one in December. 2 hikes this year, and some talk about one and done, of course. I think another point to watch today is that I think to take into account is the GDP release on Friday. We'll be covering it here as well, and the Fed will probably have the GDP figures as we speak now before they make their decision. So perhaps the tone of the statement could provide us with a hint towards the figure on Friday. If they're more optimistic, perhaps we'll have some kind of better growth, and if they're more pessimistic, it'll be closer to zero.
I like that June time frame, Yohay, for the simple reason that the whole world is bearish equities now. Okay, I mean, what a reversal in a month. And if they're moving it out to June, that might actually give the market enough time to recover to even squeeze the bears back at the old highs, and then give the Fed cover to move again because the market recovered. So the June tightening is an interesting time frame because everyone's saying you got to sell this rally in the S&Ps to 1950, and we're going, you know, pick your handle. We're going to 1750, 1650, 1500. And I think the biggest surprise would be, even though there's so much technical damage to the market, that the averages can squeak out a new high going into that time frame. It's contrarian, but I don't rule it out.
I see.
Yeah.
Especially if the yen, that was, you know, both the yen and the S&Ps took out the stops from the flash crash low, and they're both following through to the upside. And the yen, to me, when I look at the yen on the daily even, I'd say its first big obstacle is going to be right here. And talked about buying the yen up here on a retest of the breakdown around 121.5, 122.
122.
And there's a pattern that, you know, doesn't always work but fairly reliable, and no one thinks this could happen anymore. I mean, back here you couldn't find a US dollar yen bear, but we've only had 2 drives. We've had 1, we've had 2, and to me the pattern's incomplete, and everyone thinks that the BOJ won't be successful in driving it down, the yen down again, but maybe the yen, if it gets through this 22.5, 23 level, has plus 130 in it. That too, controversial, but I'm open to it. I have an open mind for both the S&Ps and yen recovering.
We have the Bank of Japan convening on Friday early morning here. So let's see if they also go dovish like the ECB, BOE.
Yeah. Under 116, there's big trouble in River City in the yen and the markets. So
yeah, that's their line in the sand.
Yeah, so we'll see how much muscle they have left then, right?
Yeah, like everybody else, they prefer talking instead of acting, and they began talking when it dropped to 116, a bit under 116, Currently, they have a more comfortable environment, but yeah, they might be forced to act.
It'll be easier. They'll be more effective acting now than if they wait for it to take out that level. Because you know what, I was always taught that the market's bigger than any bank, even central banks.
Yeah.
Yeah, George Soros
Except the
explained
S&P.
that.
You know, also, I know I'm talking a lot, but I'm starting to read, and you know, when we did that poll at the end of the year, Val, and I believe Ivan asked what could rally crude, and I said bashing the dollar. I'm starting to read some things that there's potentially a Plaza Accord 2.0 in the works, or coordinate that. That's probably going to be the only thing that could break the dollar. It worked back in, when was that, 1986, for some type of coordinated direct intervention in the markets. That's what it was. It had nothing to do with interest rate policy. It didn't have anything to do with central planning. It was everyone came in and sold dollars. And that eventually led to interest rates spiking up here in the U.S. and the 87 crash. But keep your eye out for some type of central bank coordination because of the pain of the dollar. What do you think? Have you been reading anything like that, Val?
I'm sorry, what?
Have you seen anything like that? Read anything like that about a possible Plaza Accord again? Some type of what a coordinated, massive intervention against the dollar by major central banks?
No. There was one when everyone cut rates. I don't know if you remember that. It should have been 2004, 2005, sort of. When
The coordinated intervention from central banks, 7 central banks. It was like 2008, I think.
Oh, yeah, during the crisis, yeah.
Yes.
Yeah, right ahead of the U.S. opening, several central banks cut rates altogether. Remember, it was a shock to the market because first come the headline of one, but it was the U.S., Europe, London, and I'm not sure about Asia, what happened, I don't remember clearly, but we have a rate cut altogether everywhere. Do you remember that, guys? I will check back.
Yeah. Those were worse days than now, yeah.
Yeah, probably 2007 when it was the crisis, right? Closer to that date.
Okay, guys, there is a question here about the dollar Canadian. Dollar is, there is some, I think Adam is, well, Ralph is asking about the dollar Canadian dollar, and then Adam is asking, is saying that, yeah, dollar Canadian dollar long, and said that following oil decline, because he thinks that the oil will go down in a few minutes. What do you think on that?
Not in a few minutes.
Not sure. Yeah, I'm with Dale, thinking of a probable upward move up to 35. If anything, because of profit taking, given that the oil bottom around 26 and bounce and it's posting higher highs. So I do believe that the dollar CAD risk is towards downside. Maybe we see it breaking below 140.
Yeah.
Okay. Yeah, go ahead.
Yeah.
Go.
Yeah, there was talk about some kind of intervention by OPEC with non-OPEC members. I don't think it's serious, but at the moment, the short squeeze, the profit-taking, sort of overshadows the reality of oil markets, which is that there's too much oil, too much supply, not enough demand. But at the moment, there's this profit-taking that was mentioned here, so I also see more downside.
I do believe that they are not getting along with the idea of cutting production because of Russia, right? I believe Russia is the one against the idea.
Russia and Saudi Arabia.
Yeah, that's the talk, that it would be between Russia and Saudi Arabia.
Yeah.
Okay, and we have another comment here. From Nino. Nino is asking your expectation about the federal interest rate. Well, we already say that, but about applied to the euro dollar. So if you think that the information will go towards a buy.
It will depend on whatever they said and how the market take it. If it's too dovish, then the pair can gain some ground, but it has to be really, really dovish because, as I was saying earlier, I do believe that the market has already priced in a mild dovish tone coming from the Fed. And of course, if it's hawkish or even if the Fed rises rates, which is highly unlikely, but well, that would be a huge surprise, and well, the greenback should run right against all of its major rivals, but it's something almost out of the table.
Yeah, no one is expecting a hike, right?
You know what? I bring in guests because they help me, and we spoke to Jamie Satley.
Yeah.
And Jamie has a 106.30 level for a potential buy in the euro, so I'm going to be patient and see, and I could see that happening. So
106.
106.30 from Jamie.
Yeah,
Okay.
150 pips below current levels.
Yeah.
Yeah.
106.30.
The pound looks better to me than the euro, and the euro pound looks like it's going to come back at least to the breakout. You guys remember when I liked it at 70, 71? Thought it was a right shoulder on the weekly. So here's my weekly chart. So if euro pound is heading down to the breakout, here's my weekly. The daily shows it too. So this was like a head and shoulders breakout at 70.40, 74.20 or so. So I think we could pull back at least to 74 in euro pound. Maybe it pops a little bit in here, but it'd be a natural thing for it to pull back to the breakout. Here was the breakout on the weekly right here. So that favors pound longs and euro shorts. And I know guys that think this is it in euro pound, and we're on our way to new lows. So this whole trade was not driven by euro strength. It was driven by pound weakness, right, guys? So the pullback could be driven by pound strength and not tremendous euro weakness. So we'll see.
Yeah, if the Fed is dovish because of markets and still optimistic about the U.S. economy, perhaps we could have some kind of positive risk-on mood in markets, which is good for the pound, which trades together with oil and commodity currencies, and negative for the safe haven euro. And then we could see euro pound fall, as you said. But if it's doom and gloom from the Fed because of the economy, then we could have the other direction.
You always explain to me why I think what I see, because I don't know the whys. Yohay, thank you for giving me the reason why I'm thinking something could do something.
I'm just providing my own angle on what
But
you
you
said.
know that's a very valid angle.
Well, that's a community.
Yeah.
We are a community, right?
We have a mastermind here in our coverage, don't we?
Yeah.
Mini mastermind.
We complete the tones
Yeah.
of the other one.
3 minutes.
Yeah.
In general, I'm frustrated with euro-dollar, and hopefully it'll move a bit today, but I'm not optimistic.
And the pound may also be recovering because the Parliament did not vote to ban Donald Trump from coming into the UK.
Yeah, but they had a lot to say about him, though.
They need to spend time concentrating on their own country than who they're going to ban from coming in. What do you think?
Yeah, no, they eventually decided not to ban him, but they've ventilated their thoughts about him.
Well, that's because they fear the larger Muslim population than the U.S. has.
Yeah.
Don't you think that's part of it?
Okay.
Yeah.
Yohay, we have a question for you from Fabian.
Ah.
He's asking, hello, Yohay. What is the Federal Reserve decision that is more likely to give euro-dollar a definitely direction up, and what will be definite to go down?
Well, as I said before, I'm a bit frustrated with euro-dollar, so I don't see it making big moves. in general, if we have the Federal Reserve extremely hawkish, telling us it's going to raise rates, it's negative for euro dollar, good for the US dollar across the board. Very unlikely. If it's dovish because of markets, I think it's negative also for euro dollar because euro is a safe haven. If it's negative because of fears of the US economy, that means fears for the global economy, then it's euro positive on safe haven flows. But it could also be a good scenario would be choppy, choppy, and choppy in euro dollar.
Yeah, the only scenario.
He's asking the opinion of Valeria and Dale. So, Valeria, if you want to add something.
Yeah, pretty much what we said earlier. There is this 200 pips range, 770, 970, and unless we really take one of those extremes and accelerate in a certain direction, there is not much to add for the poor euro-dollar range.
You, Dale?
Excuse me?
What do you consider that will push the euro dollar up and what on the opposite down, coming from the Fed? It's a question from the chat.
Yeah, I actually think it's that it's really going to take coordinated intervention by every central bank in the world to turn the dollar. And not interest rate policy, going right to the market and selling dollars.
Okay, no change in interest rates. The decision is out. Let's see what the statement says.
Yeah, let's see what they have to say.
Decision unchanged.
Global economic financial developments. Okay, we are scared about China.
Yeah.
Economic.
Yeah, target rate stays in range.
Not much reaction yet, huh?
No.
Yeah, as we said, euro dollar is
selling off.
Selling off around 3 pips below the previous levels.
Yeah, but the pound's holding. Ascending triangle.
Yeah.
What's the yen doing? Yen firm. That's not a major reaction anywhere from what I could see.
That's one of the more sleepy reactions I've ever seen.
Canada looks like it may want to pop.
Yeah. It's a unanimous decision, no dissenters. There was talk about a more hawkish composition of the Fed, but I guess they found some text that would fit everybody. Let's see what we have here in terms of labor market indicators were mixed, but on balance showed further improvement. The unemployment rate declined, but remains elevated.
It's one of the tamest currency reactions I've seen to a Fed meeting, and I can't remember how long.
They talk about fiscal policy is restraining economic growth, although the extent of the restraint is diminishing. Okay. You see the words "but" appearing lots of times, sort of on one hand and the other hand. In the first paragraph, it appears 3 times.
I could do my Janet Yellen imitation.
Go for it.
Well, we're gonna wait and see what happens after we already tighten once, and then we could move again unless we decide not to. But if we don't, we still could if the data tells us to. Is that okay, Mr. Market?
Do I sound like her, Val?
Yeah.
Yeah.
I'm my best audience. No one else thinks I'm funny but me. Okay. But really, isn't this an anemic response? Euro traded, what, 15 pip range since this? The pound, nothing anywhere. Yen looks like it's ready to pull back.
like a trend. Yeah, 30 pips in the euro dollar.
It's yeah. It's,
Let me check. Yeah, 30 pips up in the euro dollar.
even the stock market's not doing much either, is it? Same.
No.
Same. Okay. Well,
30 pips in the dollar Japanese yen.
well, I'm with Yohay. Probably the next important Fed meeting is June.
Well, I think March will be interesting because we'll have fresh forecasts, the dot plot. But let me see if I can find any sort of news here. Well, charts are saying there is no news.
Yeah, that's the news. That it's such a muted reaction to the Fed. Almost like
Well,
they
also we
weren't
had the GDP on Friday. So it will be the first reading of the last quarter of the last year. So
I'm hearing 1% on that number.
We can have a hint here for the GDP release on Friday.
Eurozone.
yeah, the Fed omits a line, the line that the risks are balanced. Yeah, labor condition improve. You know.
Wrong way there.
Even as economic growth slowed late last year.
Yeah. Well, nothing new, in fact, there either.
What?
The economic
Exactly.
growth slowed somehow during the late 2015.
So it's starting to act dollar negative now.
Yeah. But the poor pound refuses to move. If the euro takes the high, it could go.
Looks like it's going for it here.
Yeah.
Well, Val, what is your forecast on the Australian dollar? You see, after the non-decision, the non-event.
As I said before, it's as long as it holds above 70.40, it has room to go higher and probably test 71. We had good news in Australia, and current news are not being that good for the greenback, but I'm seeing little reaction right now. So if we take the high, then it will look a bit more constructive. Anyway, I see a slightly positive tone. It will reverse, of course, if we lost that 70.40. Stocks are giving up some ground after the initial spike. And so is the rest of the market.
It looks like a very, very, very moderate risk-off reaction. Euro and yen are stronger against the dollar. The rest are weaker, but it's very, very moderate.
Yeah.
And we have the New Zealand Central Bank decision at the top of the hour, right? Yohay, do you have any scoop on that?
The scoop is I don't know what they're going to decide.
I've become very moderate at happy hour. How about you guys? In fact, it's 11 a.m. here.
Yeah.
But it's after 5 p.m. somewhere, so.
Yeah, that's the song, isn't it?
It's 4 p.m. here, so I'm the one that's closer.
Yeah,
it's 4 p.m. 4 p.m. in Argentina, 2 p.m. in the East Coast. Yeah, it's 11 in your place, right, Dale?
Yeah, 11:07.
11:07. Barcelona is 8 o'clock.
Yeah.
Tokyo, I think, is like, let me check.
Early morning. No?
Talking then.
I'm losing you, Mauricio.
To New Zealand, there is a question from Ali. How long the euro-dollar up movement that we are watching right now will last? You know,
Which
if you
movement?
think it will last more than a few hours or it will go until what level, what do you think, Valeria or Yohay or
I
Dale?
believe we have selling interest between 930 and 960, as I said earlier. So if we can get up to those levels, we may retrace from there. Not seeing much of a strong movement going on. Once again, I believe that rather is oil that's leading the way, retreating almost back, rather than the Fed.
Crude's giving it back.
Yeah, it's more relevant at the time being for the current EU advance. But anything worthy coming from Japan.
Gold is stiff. And it looks like the Dow gave it back, went to your purple line. Well, on the charts you were showing.
Below that, 108.40.
There we go, fresh highs in the euro. That should result in further dollar slides.
So the euro dollar is reaching new heights where it's testing 109.10, and the Swiss is testing the. What is that level, Valeria? What is that line in your dollar Swiss? The moving average, I think, no? The blue
Yeah.
moving average. What is that?
Yeah, 138, 10 pips below the current level, 100 simple moving average.
I see.
Little reactions. Stocks and oil are reacting better than currencies. Not sure why oil pulled back after the Fed, but I do believe that it's the main driver of the ongoing movements across the board.
Yeah, the Fed did show it's sensitive to stocks with closely monitoring financial developments, but also a bit more worried as they didn't mention that the risks to the outlook are balanced. And yeah, and what we said about GDP growth slowed late last year.
Okay. So what will be the outcome right now? What if anybody asks you about trading, about where is the stronger currency and the weaker sister, in your opinion? Let's say Yohay, in your opinion, what are the strongest and the weakest?
The weak sister is the pound, sorry. That's the only thing I can say right now.
Okay, Valeria, go ahead and make your argument.
I can't say anything more.
But why? Well, I don't know. But why the sterling is so weak, in your opinion?
I don't know. Just ask Yohay. I have an opinion, but sorry to interrupt. I feel terrible.
No, go ahead.
Go ahead. It's your turn. Yeah, it's your word right now, Valeria.
I do believe that while the market was pricing, all through 2015, the market was pricing in a US rate hike. It was also pricing in a UK rate hike during the first half of 2015, right?
Good
So,
point.
sudden UK rate hike is out of the table, not right now, but for the last couple of months. So the pound is playing catch up and trying to lose all the ground the rest already did before in anticipation to the dollar rate hike. Furthermore, data has been pretty weak in the kingdom, so it's not supportive of a pound rally. And we have the referendum towards a Brexit, right?
When is that?
I'm not
Yeah,
sure.
I think.
It's closer, yeah. So all of that is keeping the pound under pressure. And of course, oil price is going lower. Pound is highly correlated with oil too, not as much as Canadian dollar maybe, but it's also there. Not much good to say. Those are the reasons why the pound is weak. I'm really surprised it couldn't round when oil recovers, but it quickly falls when crude does. So that's making of the pound a weaker sister of forex forward. And I won't say anything else. I will let you speak.
Well, Valeria said basically everything. I'll just add that last week, Mark Carney, the head of the governor of the Bank of England, said this is not the time to raise the rates. And that was sort of the final strike on, what did you call the pound? The weaker sister? So, yeah, so the pound is vulnerable.
Yohay, what could be the economic implications of a Brexit? I've heard some economists a bit concerned about the fallout from that. How could that end up creating some type of contagion on a Brexit?
Well, the UK and the Eurozone have lots of trade. The UK and Europe in general. The Brits sometimes talk about the continent as if they're not part of it, but this is not the case, at least economically. So it could have severe implications on both sides of the channel. I think the chances are low. It could be perhaps a closer call, like we've seen in Scotland. Not a huge majority against leaving, but a small one. But I think that there will be enough pressure, and Brits will see the advantages in staying in. So, as I see it, pound will be under pressure because of the referendum until the day of the referendum, and then this pressure will be relieved, and the pound could rise again. Of course, there are so many other factors moving the pound, but currently it just adds to the pressure. And once we have, I think they're talking now about September as a potential date, and perhaps Germany will announce a limit in the number of refugees, also to appease to the local audience, to the Germans, but also to sort of convince some unconvinced Brits to stay in. And this will come in March, and then the referendum will be held in the summer or in September. So that's what I know about the potential of Brexit. I think the chances are low.
Thank you. So there's really nothing jumping out at me from the trade that's happened in the last half an hour.
Yeah, nothing happening. If we go to the 15 minutes chart,
Except that maybe Canada's starting its correction now. To correct the correction.
oh, my chart doesn't work right now.
Just want to remind everyone who's watching this broadcast that it's okay to do nothing.
So we see, yeah, the euro dollar in the 15 minutes chart is coming from highs. It was kept there right now in previous levels.
Yeah, no, it's rolling over.
Yeah, nothing. Yeah, just 30 pips range. Not a very big movement.
Well, it's just a stop hunt. They went for the high of the day.
Yeah.
Picked off the buy stops and came back. Isn't that amazing how that happens? Everyone who had their stop over the high of the day early, they're gone now. Now it's failing. A lot of these days are algo field days to shop for liquidity, and a lot of liquidity is on both the buy and sell stops.
Yeah, well,
Looks like NFPs will turn out to be our most exciting live events for a while. Does it feel that way to you guys?
the NFP, yeah, as usual, no, it has been the
GDP
most.
has never been
GDP,
really,
yeah.
Even the ECB meeting was kind of beyond. So it's
Yes.
interesting. You know, they used to be major events, and they're
And
losing their luster.
that's because, in my opinion, of course, the employment sector is doing fine, and it's not a major concern for the Fed, right? The major concern continues to be inflation, and as long as we continue to see steady growth, in fact, the Fed has just said that, right? We had steady growth in the job sector despite the slowdown by the end of the year, and they're still concerned about inflation. So that's something going on for almost a year already, and I don't know. It's all related to rates these days. In fact, for the past couple of years, but still, unless we have a shockingly negative payroll for a couple of months, I believe that we are not going to worry too much about them.
Yeah, wages are becoming more important because if we indeed have a tighter job market in the US, and that's questionable, then we should begin seeing wages rising. The counter argument is that the real situation of unemployment is not so good. Of course, we have the real unemployment rate around 10%, and that employment is lagging. Now we have a slowdown in the US economy. Eventually it will reach jobs, and eventually the good NFPs will not persist over time. I don't have a clear opinion about that, but yeah, NFPs perhaps have more impact. In December, we did have a very exciting ECB decision, but in 2016, it seems that the mood in stock markets, oil prices, the Chinese stock market, at least for the European Open, they have a lot more impact than economic indicators, and even the mighty Federal Reserve.
Yeah, it's a change.
Range for the day in euro-dollar, 62 pips.
Yeah, what a surprise.
Do you think the ECB is happy with volatility declining in the euro?Maybe that
Probably.
might be
They're probably happy to have it close to 1 to parity because, well, it's just 8-9 cents away, right? So for them, it's great to have a weak euro and not too volatile these days.
because really the dollar index chart has been sideways really since last spring. So I don't know if this is the goal of central banks, but they definitely, except for, you know, your emerging market currencies, it's been rather calm in the currency markets, which we don't like.
You don't like it all.
Yeah. The police is coming from one of you, right?
Yeah.
Yeah, from me, you know.
Well,
let's talk some.
I'm a wild and crazy guy who loves the wild and crazy markets.
Yeah. We all do things. We don't like this.
Yeah.
I've been watching today. Is that despite the Earth's rising, yeah, of course, to being a phantom currency these days and its correlation with oil. Fact is that Swiss is making higher highs daily basis.
Yeah.
Yeah, so that's sort of telling me that there's not much room in the euro towards the upside, right? It's putting some pressure over the euro. You know, ever since the peg and well later last year with the unpeg, it's not like a big fan for the Swissy. I'm not following. I'm going to trade it, but still, I was watching today those higher highs and the euro going in the other way around. So that may finally weigh on the common currency, particularly if we recover about 200 in the Swissy.
Okay. So, Yohay, what are people asking you in your show? So what are the concerns in the European session? You know, the people who trade the European session.
Well, the concern is what's next for euro dollar, and it's also my concern. And we talked about the frustration about this currency pair. And what else? I get a lot of questions about euro Aussie and euro CAD, which are nicer pairs, I would say, in terms of movements. And yeah, and I think I mentioned this in the past. Questions about the meaning of safe haven moves, because it's not a trivial topic. We used to see sort of if an economy has good fundamentals, the currency goes up, and bad fundamentals, it goes down. In the case of the euro, and for longer years also in the yen, it's not necessarily the case, and we could see more trouble in Europe, for example, Spanish elections, Italian banking. Greece is always on the sidelines, and once these things erupt once again, I guess it does not necessarily mean a weaker euro. It could mean a stronger euro on safe haven flows. So I find myself explaining the meaning of safe haven flows, funding currencies, quite a lot.
I see, I see. What about you, Dale? Yeah, what are the concerns in the American session in your show? What are people asking you?
I would say that most people are concerned about the U.S. having a recession and, you know, all the cycles that a lot of the guests I bring in, you know, war cycles, you know, they're bigger issues than 100 pips here and 100 pips there that people are thinking about. And, you know, Martin Armstrong, he's even talking about plague cycles. So, I mean, there's all these, almost looks like, you know, end of the world type stuff going on that people are worried about. But you know what? People are most worried about, as usual, their wallet and their bank account. And it doesn't matter what's happening in the markets if they're on the right side of it. That's really what I've discovered. People aren't worried about anything but the next trade.
Yeah.
Yeah. I'm following a bit of what's going on in Twitter right now, and most of the analysts and experts I'm following are all making jokes. And that's a clear reflection of what happened today, which is nothing, right? When there's nothing to say, they're saying silly things. Not that I don't say silly things, you know what I'm trying to say, right? So this has been the worst at every meeting, I believe, one of them. But pretty much about the market's concern, I have been always amazed that the euro-dollar is the most traded pair and has been forever the most traded pair because there are so many other things to trade. And they are more profitable, more clear, more technical, more everything than the euro-dollar. And these days when the euro-dollar is in the range, people get nervous about, will it break? Will it? Well, guys, we don't know if it's going to break, and probably it won't, right? It will remain in range. Usually February is not a month where we see much market definitions, and that's I'm saying on my own experience, right? So take a look somewhere else. We'll see. CAD are always pretty much interesting. Crosses like the GBP CAD. I know the spread is higher, but it's not like in my times when the spread, when I started and these crosses had 30 pips spread, you know. Things are more logical these days, and you have a lot of action going on elsewhere. This is a thing that moves 200 pips, 300 pips a day like nothing. If you like high-speed ones, even the Guppy, right? but still amazed that the euro dollar is the most traded pair when there are a lot of other things to watch.
Great.
Okay, yeah, great point. So just to finish, I want to ask you three about the recap of what happened today with the Federal Reserve, but also I would like you to ask about a trade, a possible trade. Yeah, you know, if you want to see yeah, a pair to trade right now. So if you want, who want to start?
I know, ladies first, right?
Yeah, ladies
Of course.
first. So Valeria, yeah, go ahead.
Okay,
And that's especially because yeah, you know, you have saying us that there is not only the euro dollar in the forex
yeah, well,
scenario, so there is more there. Go
yeah,
ahead.
the euro dollar in the first world. Well, pretty much what happened is nothing, right? As we were talking before the statement, market was expecting a more dovish stance from the Fed, and that's what we got. So much of what has been said by the U.S. central bank was already priced in most currencies, right? I still believe that the main market leader is oil, which is by the way rising again, right? So I will focus more on whatever crude has to tell me over the upcoming hours than anything else. Okay, if the commodity rises further, then the preferred trades will be selling the euro dollar and buying the dollar Japanese yen, meaning selling the ones that are seen as refugees, safe havens, funding currencies, and by commodity ones, that means the Aussie can go up and the CAD can go down. Particularly in these two, I will wait 30 more minutes because we have the New Zealand rate decision right now, so it could affect a bit the Aussie. Of course, not as it will react to the Kiwi, but it will. So beware of that. And I don't know, sell the pound when it spikes. That's all I have to say.
Nice. So yeah, Robert is telling you, Valeria, that he wants to say thank you because he has been benefiting from your analysis.
You're welcome. That's my pleasure, and that's what I do it for, and I share it.
And there is a question for you, Valeria, from Ali right now. Yeah, euro will be strongly bullish at least until Friday, provide no bad news.
I'm not seeing much of euro strength right now, right? And take a look at this chart, and many times it had tried to reach the 110 level and has been rejected, resulting in interesting bearish rallies, right? So, as I said, there are so many things I have towards the upside in here: the 100 simple moving average in the daily, a Fibonacci, a trend line, those highs. It's like we have a Chinese wall, you know, there, and we really need to break it to talk about the bullish euro. Okay, I'm not saying it's not possible. I'm saying I just can't see it right now. I would love to see it. I would like to see it breaking something somewhere. Sorry, there's my chart, right? The 100 simple moving average, the daily descendant trend line, all of those highs in the 960, 970, 80 region. So pretty much that's what I'm thinking of the euro right now.
Okay, thank you, Valeria, for coming today. It has been a pleasure to be with you in this live coverage.
My pleasure, guys, as always.
Yeah, and now, Yohay, so what is your recap on that? If you have any trade
Well,
to place?
not much to add. We didn't have too much. No change in rates was expected. Quite a balanced statement, a bit leaning to the dovish side, a bit talking about global risks, financial risks, and the economy slowed a bit, so leaning to the dovish side. Of course, all the options are on the table. We're seeing a very moderate and boring reaction market, slightly risk off, stronger euro, stronger yen, weaker commodity currencies. The trade might be coming in half an hour or so, and the New Zealand rate decision could be more exciting than this one. No changes expected in the rates in New Zealand, but they might be dovish as well after weak inflation figures over there in New Zealand. China, of course, two recent falls in milk prices, and compounded with the very small fall that we had and the fact that the Kiwi dollar, let me share the chart, has been sort of trading in the higher end of the range due to better atmosphere, then perhaps we have a potential here for a slide back down in the range. So this is not a trading advice, but as also here we're seeing some kind of range trading and we're a bit higher in the range, and we have a potential for a dovish move from the RBNZ compounded with worries from the Fed, then I would say, of course, wait for the actual decision, don't trade beforehand, but I see more potential to the downside on Kiwi dollar.
Okay, thank you, Yohay, for coming today. It has been a pleasure as always.
My pleasure, Mauricio.
Your remark has been awesome. Okay, thank you, Yohay. So now, Dale, so if you want to give us your recap and if you have any trade.
Okay, I'd like to say sending triangle in the pound right here. I'd be a buyer between here and 42.25. If you want to be conservative, you wait for the breakout over 360. This formation's 260 pips, so I think we're going to see a 146 handle in the pound, and I still feel there's some more upside left in the crude oil market. Those ideas both support each other. I think the crude could still rally up towards this 35, and there is a possibility for 38. This was a rally of, let's call it 28 to 2.5, so 4.5 from 2.5 is 37, 38 crude, and so I think both the crude and the pound have some more upside left, and there's plenty of shorts in both of them. That's my view. Those are my calls. The next one is yours, Mauricio.
Well, we got a question here that's for you. This from, let me say, from Fabian too. Yeah, you are a stop hunter, so what about a stop hunt in the euro dollar going down? It's for you, Dave. What do you think about that?
There are plenty of stops to get. A lot of people are still bottom picking it, looking for the demise of the dollar. So, you know, you're going to have stops under 108.20 and a ton of stops under 107.80. And, of course, the grand prize are new lows, but I think we could see a liquidation break under both this low here at 75 and under 107.12. The stop hunts above would be breaking out back over 110. That's where they're sitting. So all you have to do if you want to know where the stops are is look at your chart, pretend you want to be long, and say, well, if I was buying this market, where would my sell stop be? And that's where everyone else's are. And if you want to be short, where should my buy stops be? And that's where everyone else's are.
That's a pretty good advice. So there is Ralph is asking, well, it's commenting here in the chat that he needs help and regards his trading style and he needs our support. But right now, well, in that point, I want to take a look on your trading and your coaching service daily. So perhaps he can take profit of your help, and you can help him if he can join you in your coaching service. So Ralph, I am just typing the Dale coaching service. If you want, you can ask for the service. It could be really nice. If you want to describe Dale your coaching, what do you do in your coaching?
I teach people to do what I say, not what I do.
Yeah,
that's a joke. So I teach people a lot about RSI and 3 drive formations, and talk about off numbers that you could use for trading based upon the weeklies, and try and find out what the emotional psychological issues are for people. I can relate. I've had every one of them, and try and resolve those so that people can trade with less pressure, and normally that's less leverage and learning how to take partial profits.
Yeah, I'm recalling that because I know that you help people to find to follow.
Yeah, we've gotten pretty good response. We've gotten good response from everyone who's done it. They felt it was worth it.
Yeah, especially to find their trading style. So yeah, if you have time, Ralph, you can check about that. If you don't want, you can be with us every day in the live analysis room, and also in the with Yohay in the European opening segment. You know, so thank you, guys. Now I want to thank you, especially Dale, Valeria, and Yohay for being with us, and also for everybody that has been with us in this live.
And remind everyone, Mauricio, there's only 2 days left of voting
Oh, of course.
for the FXStreet poll, and I already voted for Yohay and Val.
I voted for you.
I couldn't. I
It
couldn't.
sounds like a fix. Go
Yeah.
ahead, Val.
Yeah, well, I was forbidden to vote for myself.
Yeah.
Well, I just put the link here to everybody that wants to vote.
And only vote once. There are some ballot box stuffers I found in LAR. One guy said he voted 3 times, and he was tempted to do it again. So no ballot box stuffing, or you end up going to FXStreet prison for 6 months.
Maud is the one holding the key of a prison. When I voted, he sent me a mail as a girl. No way.
Yeah.
I enjoyed being with you guys, like always. Good hunting, my trading warrior brothers and sisters.
See you soon. Beware of the Reserve Bank of New Zealand now. Wait that. Bye-bye.
Okay.
Okay.
Right, adios.
Safe trading.
Okay, guys. Safe trading.
Bye.
Trading responsibly, and bye-bye.
Bye.
Good hunting, and see you there. See you tomorrow. See you Friday in the live coverage of the GDP of the United States. Bye-bye. Peace.
Ciao.
Ciao.